I want to welcome you back to our breaking news educational edition on the Retirement Education Center channel. Now, this is where we're going to be bringing you quick, timely updates on retirement related news, helping you to understand when, where, and how you can retire with confidence. Now, in today's breaking news, we are diving into the latest market sell offs, and we're going to talk about what it means for your money. Whether you are in your 20s, your 40s, or if you've already retired, we're going to break down exactly what to do and what to avoid at every stage so you can stay on track towards your financial freedom. So let's go ahead and transition over to our educational slides so you can make sure you know how to handle a market sell off. Okay, let's go ahead and start our conversation for today. The reason why we're doing this video today is that we know that the markets are selling off, and for many investors, panic, of course, is probably starting to set in. But before you make any moves, we need to talk about what you should do, and most importantly, what you should not do based on where you are in your retirement journey. So let's go ahead and jump into our lesson today. Now, if you're in your 20s or 30s, this is what we call the accumulation phase. And in the accumulation phase, here's what you should do. One of the things I'm going to encourage anyone who's in their 20s or 30s is to make sure that you're dollar cost averaging into this market downturn. Because when you're doing this, it means that you're buying stocks at a discount. The next thing you should do is increase your contributions if you have any retirement plans, if possible, because this is going to give you a chance to supercharge your long term gains while the market is down. The next thing in this age group you should be focusing on is making sure that you have growth assets in your retirement accounts. You want to make sure that you're diversified in assets like stocks or index funds that's built for growth. What you should not be doing in this age is that you don't want to stop investing because you're afraid. Here, time is always on your side when you're in your 20s and 30s. Another thing that you don't want to fall fallacy to is trying to time the bottom of the market. Because historically, we know that many people who try to time the market end up failing at it. The next thing you don't want to do here is to check your portfolio on a daily basis. We know that volatility is going to be there, and your investments are definitely going to be going up and down on a daily basis in a time like this. But you have to understand that you're in the market for the long haul. Now, if you are in your 40s or 50s, this is what we call the pre retirement phase. Here's what you should be doing right now. One of the things you got to take note of is your asset allocation. You have to ensure that you have a balanced mix of stocks, bonds, of course, mutual funds, cash. You have to be very well allocated towards your risk tolerance. If your allocation is not where it should be based off of your risk tolerance, you may have to rebalance your portfolio because in the pre-retirement phase, you don't want to be too exposed to stocks because that could be a risky endeavor. The next thing you want to focus on here as well is to increase your contributions if you have fallen behind, because when you turn 50 and older, you are allowed to do catch-up contributions into your IRAs and your employer-sponsored plans. So this could be a great opportunity to catch up on your contributions while the market is down. Also, in this stage, you want to make sure that you review your financial plan if you have one. And of course, if you don't have one, this will be a great time to get one because you want to ensure that you have a strategy in place for downturns like this in the future. But here's what you should not be doing at this stage. You don't want to make any knee jerk reactions to your portfolio. Selling in a panic, of course, is going to lock in those losses. You also don't want to overcorrect because going too conservative too early could also hurt your long term growth in your portfolio. So you want to make sure that you are talking to someone who can help you stay the course so that you don't go too conservative too soon. And last but certainly not least, in this stage, you don't want to ignore having an appropriate emergency fund. And that's having anywhere between 6 to 12 months of expenses covered because that could keep you from selling any investments at the wrong time. And of course, last but certainly not least, if you are retired or you're about to retire, this is what is known as the preservation phase. Now, here's what you should do in this phase. Check your cash reserves. Here, you want to have anywhere between 3 and 5 years of living expenses in cash or other safe options like CDs or money market accounts to hold you steady during a major market decline like this. Because in this stage of retirement, you could be possibly taking distributions from your retirement savings, and you certainly do not want to be taking distributions while the market is down, because that can expose you to a little known risk known as sequence of returns risk. Another thing that you may want to consider in this particular phase is reducing your withdrawals if possible. That means you want to minimize your withdrawals in a downturn because that can help preserve your capital. You also might want to speak to your advisor about dividend paying stocks or bonds or even annuities to provide you with some sort of steady income stream during this time as well. And one last thing you should be doing if you're in the preservation stage during a market sell off is that you may need to rebalance your portfolio. When you're thinking about rebalancing your portfolio in a down market, what you want to focus on is making sure that you have a sustainable mix of safe assets in your portfolio to make sure that your risk tolerance and your money is matching. But here's exactly what not to do. Once again, do not sell in a down market out of panic or fear. Again, this is going to lock in losses and it's going to reduce your ability to have those funds recover potentially in the future. Also, don't assume that you have to make any drastic changes here. Very small adjustments can go a long way when you're talking about trying to make subtle changes in a market sell off. So don't try to overcorrect again. Don't make drastic changes during this time. You want to be sure to talk to your advisor about what you should be doing. And of course, last but certainly not least, do not forget about taxes. Because if you start selling out of panic or fear, just know that you could be triggering some major taxable events. So you need to plan wisely here. So my final thoughts here is that market sell-offs are definitely stressful, but they are temporary. So having a plan is the key to staying calm and making smart financial moves. So make sure that you're able to stick to a strategy, rebalance your portfolio wisely, and please make sure you speak to a certified financial planner who can help you understand these matters better. And if you haven't already, hit the like button, subscribe to this channel for more financial insights like this, and go ahead and drop a comment in the comment section and let us know how you are personally dealing with this current market sell-off.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.